Bob Hathaway. I run the Asia program here on behalf of my colleagues in the Middle East program and the Kissinger Institute, as well as the Asia program. We're delighted that we filled up this room and indeed have a sizable number of people downstairs in the overflow room. I think that says a great deal about the significance of our topic today. It says just as much about the quality of our speakers. I understand that you didn't come to hear me, but in fact you came to hear these speakers, so I'm going to follow the lead of Stape Roy and assume that you have already read the bios of each of our distinguished speakers, and we'll turn it right over to them. We're going to get started with Erica Downs. Erica is China Energy Fellow at the Thornton China Center at Brookings. We'll then turn to Afshin Malavi, who's a Senior Research Fellow at the New America Foundation. And last but certainly not least, we'll hear from Jean-Francois Sesnick, who's a Visiting Associate Professor at Georgetown. Each of these speakers is eminently accomplished, and I encourage you to read their full bios in the handout we provided. Erica, we are delighted to let you get us started.
Thank you. Good morning. It's a pleasure to be here today. My presentation is going to focus on China's energy relations with the Persian Gulf, and I'm going to focus on three countries today: Saudi Arabia, Iraq, and Iran. These are not the only countries in the region with which China has energy ties, but in my view, they're the three most important. And I'm going to spend the most time talking about Iran, not only because I think this is the bilateral energy relationship that's the most difficult to get a handle on, especially in terms of what the Chinese are or are not doing in terms of investments in Iran, but also because the United Nations Security Council Resolution 1929 and the new congressional sanctions legislation that President Obama signed into law at the beginning of this month have some interesting implications for China's energy ties to Iran. So I'd like to start with Saudi Arabia. And my sense is that the view in Beijing is that Saudi Arabia is a very reliable energy partner. And this is a message that the Saudis have tried on many occasions delivered to the Chinese. And one fairly recent example of this came from Saudi's Minister of Petroleum in late 2009 when he was receiving an honorary degree at Beijing University, and he said China can rely on Saudi Arabia to provide it with the oil it will need to continue its projected growth for the coming decades. And this was also a message that was conveyed to Chinese President Hu Jintao when he visited Riyadh in February 2009. Saudi Arabia has been China's top crude oil supplier for a number of years now, including last year when it accounted for 21% of China's crude oil imports. As some of you may have seen in the press earlier this year, Saudi Arabia is challenging the United States, China is challenging the United States to be Saudi Arabia's largest crude oil customer. And I should mention that I think this simply reflects the underlying changes in the geography of energy. Looking into the future, the center of world oil demand growth is going to be countries like China, India, and even the Middle East itself. It's not going to be the United States or Europe. Next, I'd like to turn to Iraq. And I've subtitled this slide Land of Opportunity because I think for China's national oil companies, or NOCs, Iraq represents a tremendous opportunity to acquire upstream or exploration and production assets. And that's because Iraq is one of the few countries in the world with huge fields that are open to foreign participation. And because of this, Iraq, along with Iran, have been placed at the center of China National Petroleum Corporation, or CNPC's upstream growth strategy for the next decade. As many of you know, China's national oil companies have moved very quickly to secure a foothold in the Iraqi oil patch, and they're in fact the dominant players there today. China National Petroleum Corporation it was the first foreign company to renegotiate a contract signed with Saddam Hussein's regime. And that was for the Al-Adab field. This contract was initially signed back in 1996, and then CNPC really didn't do much to develop the field because of UN sanctions and the war. But at the end of 2008, they did renegotiate that. It's no longer a production sharing contract, it's a technical services contract, but they were able to hold on to the field. And there's a sense in China that this sort of foot in the door led the company to get additional contracts. And here are some of the contracts, the major contracts that China's national oil companies have in Iraq. Again, these are all technical services agreement, but some very big fields, notably the bottom three on this chart, are included. And I think, again, this is, and in addition to getting a foothold in Iraq, these contracts have also given China's national opportunities an opportunity to partner with major international oil companies. And here I'd like to just highlight the partnership between CNPC and BP for the Rumaila field. I think when this deal was first announced, it raised a lot of eyebrows because CNPC and BP, I believe, were the only companies that were willing to accept the per barrel remuneration fee offered by the Iraqis, which was $2 per barrel. Most other consortium companies wanted to be paid much more than $2 for every barrel that they produced, and there was a lot of questioning about, is there any way that these companies can actually make a profit? That was sort of the initial reaction, but since then there have been more analyses coming out saying that maybe this is really a great partnership between a Chinese national oil company and an international oil company, and that they both bring complementary things to the table. In the case of China National Petroleum Corporation, it brings a low-cost supply chain, lower-cost engineers, and I should add also the ability to execute projects very quickly. Whereas in the case of BP, they probably bring special knowledge of the field due to past history in the region and the fact that BP surveyed a lot of these fields for the Iraqi government in recent years, as well as technology. And now this brings me to the third and final country that I'm going to talk about, which is Iran. And here, China's national oil companies, just like all the other foreign oil companies who have who've tried to invest in or have invested in the Iranian oil patch, they've learned that it's a very tough place to do business. I'm going to start by saying a few words about China's trade relationship with Iran, and then I'm going to get back to investment. Iran is also, like Saudi, is also a very important crude oil supplier to China. It's been China's #3 supplier for the past 5 years, and this was true back in 2009 when it delivered an average of 465,000 barrels per day of crude oil to China. That said, China's crude imports from Iran do fluctuate on a monthly basis, and if you look at this chart, in January and February 2010, especially in January, there was a big dip in China's crude oil imports from Iran, and this prompted a lot of speculation about whether this reflected a political decision. Had the Chinese government instructed the companies to buy less, or the companies decided to buy less because of the political risks associated with doing business with Iran, given the international tensions over the nuclear issue, or did this just simply reflect other economic factors? It's hard to say because it was the drop in January and February 2010 over January and February 2009 that prompted a lot of the speculation, but then we saw a huge surge in Chinese crude imports from Iran in March 2010. I don't have data available for April or May. There's been a bit of a lag. Usually places like Reuters and Dow Jones publish data that's released by the China's General Administration of Customs with a 3 or 4 week lag, and that hasn't come out yet. But I have seen industry press reports that say that Chinese crude imports from Iran for the first 5 months of 2010 are down 35% from the first 5 months of 2009. And now I'd like to turn to the investment side of the story. As I mentioned earlier, this I think is the most difficult part of the relationship to get a handle on. I think part of that reflects the fact that the Iranian media tends to overplay these deals while the Chinese media tends to downplay them. I think in the case of Iran, anytime a Chinese oil delegation shows up simply to talk, you'll get a headline like Chinese agree to invest, $16 billion in Iran, and then you read the fine print and you find out that they've only agreed to come back and hold further negotiations on investing in projects that might be valued at $16 billion. And I think the reason for this is that it pays political dividends for Tehran, and that it helps demonstrate that Iran's not internationally isolated. Whereas I think in the case of China, these deals tend to get downplayed in the media, in part because I think that China's national oil companies don't want a lot to draw too much attention to what they're doing. And I've sort of heard anecdotally that they actually wish the Iranian media wouldn't play up their meetings so much. But here on investment, I guess my bottom line is that actual Chinese investment in the Iranian upstream, so in exploration or production projects, is probably only a fraction of the $80 to $120 billion that you frequently see cited in media reports. This is the figure that a lot of reports say Chinese oil companies have committed to Iran, and I think the key word here really is committed. And part of this, the other part of the story is that most of these reports don't ever tell you how they get to 80 to 120 billion. And I've only been able to get a figure that high by including a deal that has not yet been finalized. And this goes back to 2004 when a Chinese oil company, Sinopec, and Iran signed memoranda of understanding that were linked, in which Sinopec was offered the rights to help develop the Yadaviran oil field in return for purchasing 250 million tons of liquefied natural gas, or LNG, over 25 years. And it was the Iranian side that insisted on linking the oil field development to the LNG purchases. And when these MOUs were signed, you saw, I think first in the Iranian press and then in the Chinese press, estimates of this deal at 70 to 100 billion. And I think most of that estimate includes the cost of importing 250 million tons of LNG over 25 years. And as many of you know, the Yadaviran contract was finalized, but the LNG supply contract has not yet been signed, and I think is very much on the back burner. And furthermore, and while the Yadaviran oil field contract has been finalized, a buyback agreement was signed in December 2007. A lot of the other deals making headlines have not been finalized. And besides, once you get beyond Yadaviran, it's really hard to figure out what's going on, because so many articles use the word agreement, and you don't know what type of agreement is it. Is it a buyback agreement, in the case of oil, for gas? Is it a purchase and sales agreement? Is it just a letter of intent? Is it a heads of agreement? Is it a memorandum of understanding? Because all of these things are different, and not all of them are binding. And so as you can see here, you have a lot of projects, especially the two pricier items on here, investments in the South Pars gas field and the North Pars gas field, for which this is the best I can gather, there aren't final binding contracts being signed yet. There are a couple of reasons for this. One, despite the fact that the Iranian oil sector needs a lot of investment to maintain and ideally to grow production, the terms offered to foreign investors aren't that attractive. A second reason is that the Iranians are really, what I've heard from oil companies that have done business there, is that they're really tough to negotiate with, and that it's really hard to sort of get a final contract signed off on, in the sense that once a foreign company agrees to something and they walk away from the negotiating table thinking we have a done deal, a lot of times the Iranian side will say, well, if the foreign company agreed to this, then maybe we didn't push hard enough, maybe we can squeeze a little bit more out of them, and so, let's go back to the table. Third factor is technology, in that, again, some of the higher valued investments that the Chinese are pursuing are for liquefied natural gas projects, and right now neither the Chinese nor the Iranian companies have the technology to do this. And it's going to be very difficult for them to get. It has been and will continue to be difficult for them to get that technology because of multilateral and unilateral sanctions. And finally, there's geopolitical risk, and I think the China's national oil companies, like all other oil companies, are sort of reluctant to pump billions of dollars into a country when they don't know whether or when they'll be able to get that money out. That being said, Iran is really a grand prize for China's national oil companies in the longer term. The country is the world's second largest oil and natural gas reserves. And like Iraq, it's a country with huge projects that are open to resource-seeking companies. Yadaviran and Azadagan, huge oil fields, South Pars, North Pars, huge gas fields. And so I think the companies view Iran as a great prize in terms of long-term access to resources. Again, as I mentioned earlier, both of these countries are at the center of China National Petroleum Corporation's strategy for upstream growth over the next decade. My sort of take on the Chinese oil companies' approach to Iran so far has been that they want to be first in line for projects after sanctions are lifted. They're happy to negotiate deals, some of which are binding, some of which are non-binding, for projects that they know probably would have gone to major international oil companies in the absence of sanctions. I'm not an expert on the Iranian oil sector, but I've heard from colleagues who follow it much more closely that the Iranians would prefer to have other international oil companies, especially ones with the LNG technology, developing their fields, and that the Chinese companies are an imperfect substitute. However, Chinese oil companies don't appear to be in a rush to actually invest huge sums of money in Iran. And I think that their experience in Iraq might be a model for what they're doing in Iran, and that they went in, they signed the contract for Adab when Iraq was under UN sanctions, and then they dragged their feet, they slow-walked the project, and then after the war was over, they were able to hold on to that field and sign a new contract with the new Iraqi government. And finally, I just wanted to say a few words in closing, both about the impact of Chinese energy interests on the Iranian nuclear issue and about the impact of the Iranian nuclear issue on China's energy interests in Iran. So starting with the impact of China's energy interests on the Iranian nuclear issue, as many of you know, energy is an important driver of Beijing's posture towards Iran. The Chinese government views energy as a legitimate Chinese interest in Iran and is reluctant to adopt a posture towards Iran that will jeopardize future energy deals. That said, energy is just one of multiple factors that shape China's position and shape its stance in the United Nations Security Council, and I just have a number of other factors that the top Chinese leadership has to take into consideration when they figure out what to do when they're figuring out what to do in Iran, and this includes China's relationship with the United States. This is a very important bilateral relationship to China, and Iran features prominently in it because nuclear nonproliferation is a centerpiece of President Obama's global agenda. The administration has conveyed to China that a nuclear-free Iran is a core U.S. interest, and it's an issue in which we've requested help from the Chinese. Plus, China has its own concerns about nuclear proliferation. China is a signatory to the NPT. It's not in China's interest to see another state acquire nuclear weapons, and Chinese officials have stated that they are opposed to Iran possessing and developing nuclear weapons. China's also come under a lot of other pressure from states in the region, such as Saudi Arabia, United Arab Emirates, and Israel, that have made clear their opposition to a nuclear-armed Iran. I think this is important because it drives home the point that this is not just, for China, this is not just an issue in the China-U.S. relationship, that it impacts its relationship with a lot of other countries. Another factor, and this sort of gets more into the UN diplomacy, that there's a sense in China that sanctions are not an effective tool of statecraft, and a lot of that's rooted in China's own experience as the target of sanctions, both in the 1950s and after 1989. And of course, the positions of the other members of the UN Security Council, especially the P5, do influence how China votes. Now I'd like to sort of turn the relationship around and look at the impact of the Iranian nuclear issue on China's energy interests in Iran. As I mentioned at the beginning of my presentation, it seems to me that both 1929 and the new U.S. sanctions resolution may sort of force China to have to confront a hard choice that so far it's been able to avoid. And I'll get to that in a second, but it seems to me that the new UN Security Council resolution and the U.S. sanctions provide China with both greater rewards and risks risks with respect to investing in Iran in terms of rewards. I think that these resolutions and the U.S. legislation prevent Chinese companies with an even greater opportunity to gain stakes in huge upstream projects. As many of you know, U.S. companies aren't invested in the Iranian upstream. European firms are pulling out, and they may be subject to new sanctions themselves. So this sort of really opens up the Iranian upstream to the Chinese. And the Iranians are aware of this, and they're already stepping up their efforts to try to get the Chinese to finalize some of those contracts that have not yet been finalized. And one example of that is earlier this spring, there were reports that Iran was already trying to transfer operatorship of the South Azadagan field to China National Petroleum Corporation, even though there's no binding contract that has been signed. However, there are greater risks for the Chinese companies if they move forward, in that the new U.S. sanctions require greater scrutiny of Chinese investments than they did, or just I should say investments by any company in the Iranian upstream than they did in the past. And this sort of brings me to the hard choice that I was talking about earlier, and that it seems to me, in light of the new resolution, in light of 1929 and the new U.S. sanctions, that China might be confronted. And here the key word is might. This is not definitely going to happen, but I think this is a possibility. Do China's national oil companies move ahead with their investments and run the risk of U.S. sanctions and straining China's relationship with not only with the United States, but European Union and the United Nations? Or do China's national oil companies hold back on investments and risk jeopardizing long-term upstream access to Iran? And then by way of conclusion, although my job here today was to sort of present, to talk about China and Chinese interests and policy, I do want to say a few words about the United States, because I think that 1929 and the new U.S. sanctions also might force the United States to have to make a hard choice that so far it's been avoiding, and that is, if a Chinese national oil company undertakes a sanctionable activity in Iran, does the United States impose sanctions and risk losing China's cooperation on the Iranian nuclear issue and other issues, or does the United States grant China a national interest waiver and risk irritating other governments and companies in places like Europe, Japan, as well as the lawmakers on Capitol Hill that work so hard on this legislation? And I should say that one of the key components of the legislation is that now, if a sanctional activity occurs, it has to be investigated and a determination has to be made. And I think this is true in the case of if a memorandum of understanding is converted to a contract. And that wasn't true in the past. Back in December 2007, when Sinopec converted its MOU for the Yudavaran field into a buyback contract, that wasn't under the old legislation a triggering event. But under the new legislation, if an MOU or memorandum of understanding is converted to contract, then the U.S. is required to do an investigation and issue a determination. So I'll stop there. Thank you.
Afshin Malabi.
Good morning. It's good to be with all of you. It's good to be back at the Woodrow Wilson Center. This was my intellectual home several years ago, and it's good to be home. I would like to thank Hale Esfandiari. I'd like to thank Mona Yusuf, if she's here somewhere. She's probably solving a crisis somewhere, and the Asia program as well for putting together this excellent program. I've learned a great deal already. What I'd like to do is to first take you to Mecca, Saudi Arabia. The holy city. I was there a few years ago. I was visiting and doing what many people do when they're in Mecca after undertaking the pilgrimage. They shop. People often say Dubai is the shopping Mecca of the Middle East. Well, Mecca is also the shopping Mecca of the Middle East. There are all sorts of shopping malls and bazaars and places where you can buy goods, and pilgrims often go to Mecca and they buy goods. Well, there's obviously the bazaars are full of Chinese-made goods, they're full of Asian-made goods, but one of the things that was very striking to me is the religious trinkets, the replicas of the Kaaba, in the structure that you circumambulate when you're doing the pilgrimage, the replicas of the Grand Mosque. When I was looking at all of these, replicas of the Grand Mosque, the eye with, Allahu Akbar, written on it, I was looking at all of them, and they were made in China. And I was asking one of the shopkeepers about this, and he pointed me to a Chinese city called Yiwu. Now, if any of you have read Ben Simpfendorfer's book, The New Silk Road, I recommend it. He spends about, a good chapter talking about this Chinese city of Yiwu. This Chinese city of Yiwu attracts more people from the Middle East than the entire United States last year. It has become a center of trade for small Middle Eastern merchants who go to Yiwu, they buy these goods, and they bring them back to the bazaars in Damascus and Cairo and Mecca and other places. It is a sign of the times. Those of you who have traveled in the Middle East and have been traveling to the Middle East for the past 15 years or so know that there is, some striking physical aspects of the region that you see change right before your eyes. You see more satellite dishes, certainly in the past 15 or 20 years. And in fact, they're the scourge of the skyline in some ways. You see more skyscrapers. And some may say those are the scourge of the skyline of the Middle East region. You see more veils, particularly in places like Egypt, and you see more Chinese. You see this physical change in the region in terms of the people that you're seeing in the region. And so when you look at the China-Middle East relationship, two things happened in 2009, essentially. China overtook the United States as the biggest exporter to the Middle East, and China surpassed the United States as the largest buyer of Saudi crude oil. And even if you look at this past week's headlines, the Agricultural Bank of China, you probably have been reading in the business pages, had this very high-profile initial public offering, $23 billion IPO. This was the single biggest IPO in history, and it's surpassing a record IPO, which also happened to be a Chinese bank, the ICBC Bank of China. In both of these IPOs, the single largest investors in these IPOs were Middle East investors and sovereign wealth funds. In the Ag Bank IPO in China, the single biggest investor was the Qatar Investment Authority with a nearly $3 billion investment. The second single biggest investor was the Kuwait Investment Authority with an $800 million investment. So clearly, the sovereign wealth funds are seeing potential and trying to play the China growth story through investments in these banks. When one of my editors, Charlie Peters at the Washington Monthly, once told me, when you are having trouble with a particular story, when it doesn't make sense to you, you follow the money. Well, in this relationship, you can also follow the oil. And when you look at China, it's currently consuming about 8 million barrels per day. That could double to 16 million barrels per day over the next 2 decades. And with domestic production peaking at about 4 million barrels per day, this will only bring China and the Gulf states closer together, as was stated in some of the earlier panels and as Professor Downs so eloquently put it. And if you also look at China's refineries, they are, in many ways, their new refinery expansion is expanding in a way that would meet the high sulfur sour grades of Middle East crude oils. So we're seeing a lot of that. Now, I have broken down, I generally try not to use PowerPoint in my presentations, but in discussing this economic relationship, I felt I had to. Let's see. No, that's not mine. Let me see. There we go. There we go. And at risk there was protest earlier about this use of the term Chindia, but I would just like to introduce you to this geoeconomic entity of Chindia, not to say that there's necessarily any relationship, strategic China-India relationship. I agree with the earlier panel about the fact that there is actually, a rivalry in many ways between these two. But if you look at it, simply this notion of Chindia, you have it probably shouldn't look like that, should it? But that's okay. Okay, so you have a population of about 2.5 billion, 6.3 trillion GDP. Combined average growth for 2009. There we go, John. I'm surprisingly computer illiterate for being a a member of the internet generation. Thank you, bravo. Bravo. So you have this combined average growth for 2009 of 7.5%. And the U.S. and EU had negative growth. China is forecast to have the highest growth in the world through 2030, and India is not far behind. So it makes sense that if you are King Abdullah of Saudi Arabia, to choose China as the first place you visit as soon as you ascend to be the head of state. It also makes sense that you would go to India shortly thereafter. And I think what is quite striking about the Saudi-India relationship is Saudi Arabia is no longer seeing India purely through Pakistani eyes. And that's something very important to look at in the future. When you think about China and the Middle East, China has surpassed the U.S. as the world's largest exporter to the Middle East. It had surpassed the U.K. in 2002 and Germany in 2006. But this is growth at startling speed. If you looked at the trade numbers and China's exports to the region in the early 90s, even through the mid-90s, you wouldn't see anywhere near these kind of trade numbers. So it has come at a startling speed. This Middle East now sends more visitors to this single Chinese city of Yiwu, according to the Simpendorfer book, to the entire United States. So when you think about China and the GCC, the trade relations are growing dramatically. I think Emil had mentioned the McKinsey number that everybody talks about, that they think trade flows by 2020 will climb between $350 billion and $500 billion. But clearly, since 2006, Asia has been the largest trade partner of the GCC. If you are a GCC country, and you were to do a profile of GCC countries, you would find that you are, in many ways, geo-commercially and geo-economically Asian, whereas you may be more geopolitically American and Western in terms of the security relationships. When you think about India and the GCC, GCC is the second largest trading partner of India after the United States. There was a new study that the Dubai Chamber of Commerce put out that put the latest trade numbers at $91 billion. GCC countries are also a major source of petroleum for India. This is in many ways, the Silk Road revived. When earlier some people were talking about the India-Gulf relationship, and Emil had mentioned the contextual and societal aspects of this India-Gulf relationship, I think it's quite important. If you were an Emirati in the 1960s or a Bahraini in the 1960s, your mode of currency was the Indian rupee. There is a very significant trade relationship. If you were the Al Maktoum ruling family in Dubai in the early 20th century, when you wanted to set yourself up as a major port city in the region, you invited Indian merchants and Iranian merchants to your port. And so in many ways, many of those Indian merchants and Iranian merchants form the backbone of some of the leading Dubai merchant families today. Though they don't like to admit that all the time. The first post office in the Gulf region was in Bahrain. It was a sub-post office of the British India Post Office. And what I like about the way China talks about the region, they often use the term West Asia. And there's been a lot of talk about lines. There's been a lot of talk about geography. I think this is in many ways the meeting of West Asia and East Asia. John Alterman's point about Muscat being closer to Bombay. There was a prominent Bosnian trader in Dubai, and you can find these kind of only these kind of people in Dubai. He's the head of an Indian food conglomerate, and he was telling me that Dubai, and I thought he made a pretty good point. Dubai can survive on 3 cities alone, none of which happen to be Arab: Karachi, Mumbai, and Tehran. And so this is, it's very important to think about the geography in the ways that you were encouraged to in the earlier panel. When you think about Chindia and energy, oil consumption, 11 million barrels per day. Oil imports, more than 6 million barrels per day. Natural gas consumption, third after the U.S. and Russia. And so it's very clear, as was stated in earlier panels, and as Professor Downs has also noted, that when you look at the numbers, when you project outwards, Chindia is going to account for about 28% of world energy consumption by the year 2030, and in contrast, the U.S. share will fall to about 17%. But this is also very important if you are the CEO of Saudi Aramco. This is very important if you're the king of Saudi Arabia. This is very important if you are an investor, if you are a national oil company, because you need that demand. You need that demand, and you need that demand to be secure in order for you to make the investments that are necessary for you to continue to increase your production. And that's exactly what Khalid Al-Faleh, the CEO of Saudi Aramco, said. And I'll let you read it yourselves, but he essentially said that China is contributing to energy security simply because of its rising demand, and because that's encouraging and sustaining those vital investments that are needed. When you think about the economic growth in Chindia, we talked about this earlier. These are two growing economies, heavily reliant on the Gulf region's most important commodity. China's oil production and consumption, the graph intersected right here. It will never intersect again. Its consumption will continue to rise. Its production will never see that point again. And so I don't need to belabor the point. China's growing and it needs more energy. As Professor Downs noted, its total imports for first 5 months of 2010 were up 29% from 2009. Its imports exceeded 5 million barrels per day in April. That was a record intake. Angola has been the top supplier. Saudi Arabia has been second. Iranian imports, as Professor Downs noted, are on the decline, whereas imports from Brazil, Libya, Kazakhstan, and Iraq are up. So when you look at the May 2010 figures, which I got from some of the industry reports, the Platts news agency, you see this is just May. So this is not the full 2010. But just May, what you find that is quite striking, if I can get this part right, you look at Iran. 189,000 barrels a day in May. Quite a significant fall for an Iran that has traditionally been the third largest supplier of oil to China. And we see Brazil on the rise, Kazakhstan on the rise as well. And when you bore deeper into China's and Iran's relationship, these numbers are not necessarily over a long enough time period for us to draw significant conclusions, but they are interesting nonetheless. China imported 730,000 barrels a day from Iran in May 2009, 189,000 barrels a day from Iran in May 2010. The first 5 months of 2010, 193,000 on average, 354 for the first 5 months of 2009. In May 2009, Iran was the #1 supplier to China. Again, just for that 1 month period. But the interesting thing is that Iran is certainly losing market share in China. And they're also losing market share in Japan and India, two other very important sources of Iranian crude. Now, there's a lot of talk about whether this is a political decision by China or is it simply a pricing matter. Is it that the Iranian crude is being priced at too high a premium and some of its term buyers are holding back as a result? And I think we don't have a definitive conclusion on that yet. Although you can, if you read the oil industry press, you will see most traders say it has to do more with pricing than politics. Iran, just briefly on Iran, because I want to make a larger point about the China-Iran relationship, has aging fields, declining reserves. Iran's natural annual decline rate in its fields are about 8 to 11%. That would be fine if it were a normal country that could attract investment, if it were a normal country that could attract the Western multinational oil majors to invest in its oil fields, but it cannot. There's not a single major multinational Western oil company that's willing to invest significantly in Iran's upstream today. So Iran uses some of its natural gas to enhance its recovery, but Iran is in trouble without Chinese investment. So the investment taps are dry, essentially. Even according to Iranian own officials, oil minister Mir Kazemi says that Iran needs about $200 billion in oil gas refining investments over the next 5 years to avoid a production decline. There was a study that Iran's own Majlis did that argued that within 10 years, unless Iran were able to increase production, Iran may face a scenario where they will have very little or no oil to export at all. Because of the rising demands and consumption in Iran, the Iran graph in consumption is going up and the production graph is going down. Iran was producing 6 million barrels per day before the revolution in 1979. It's anywhere between 3.5 and 4 today. The new EU sanctions will increase pressure on European companies operating in Iran. Shell and Repsol have recently exited a major gas project. Eni, which has a 50-year relationship with Iran, has been announced that it's pulling out of the third phase of a project. And so Chinese companies, in many ways, remain Iran's only hope. So when you look at the EU sanctions on Iran in the pipeline, I just thought this was interesting from one of the industry publications that noted that these EU sanctions, if they come into fruition, would make it even harder, if not impossible, for European oil companies to invest in Iran and may force majors such as Total, Royal Dutch Shell, and Eni to pull out of the country completely. And so when you look at new Iranian crude oil projects and, through 2015 and IOC participation, I thought Professor Downs' graphs were far more elegant than mine. But you see Sinopec, you see CNPC, you see a heavy Chinese presence. And so it goes back to the issue that was debated in the earlier panel. Who is more dependent on who? How strategic is the relationship between China and Iran? And in many ways, Iran is over-dependent on China for its crude oil future. And let's not forget, if you are an Iranian policymaker and you look at your crude oil, you see 80% of your hard currency earnings coming from crude oil. You see 50% of your fiscal revenues coming from crude oil. So you are significantly dependent on China for your crude oil future, and that's not a good position for Iranian policymakers to be in. And Professor Downs is correct. In my own many conversations with officials from the National Iranian Oil Company of Iran, they do often talk about how much they would prefer to be dealing with the Totals of the world, the Royal Dutch Shells of the world, the BPs of the world. They would rather be working with them than the CNPCs of the world. Who are the major buyers of Iranian crude? You have the single biggest buyers, UI Zhenrong of China. They've agreed to pay in euros. But you see, Reliance Industries goes back and forth. It's hard to tell whether they're buying from Iran or not, because shipping sources will see Reliance Industries shipments coming from Iran, and then Reliance Industries will essentially announce that they are not buying from Iran. And the reason is because Reliance Industries has an increasingly robust U.S. presence, and therefore they don't want to risk the ire of the U.S. Congress. And so, Iran as a gas exporter, there's significant squandered potential there as well. There have been gas pipelines discussed for Iran, Pakistan, India, Kuwait, Bahrain, Sharjah, Ras Al Khaimah, a link to Turkey for Nabucco. This is something that I think Professor Downs mentioned. There's a lot, headlines emerge and we see big numbers. If you were to go, I sometimes go to the IMF library and I'll read the oil industry publications. And if you put 1 year of publications out in front of you, what will happen is you'll see in January, 09, Iran, China, cooperation on $10 billion, $20 billion deal, and then 3 months later, Iran, China, Inc. agreement on $10 billion. And then, 3 months after that, dispute arises over pricing in Iran, China, and then 3 months after that, Iran angered by China's slow response and slow movement on a deal. And so the headlines that come out today can often, wrong foot you. And I think Professor Downs noted that well, that it's actually more in headlines than in reality in the Iran-China relationship. Saudi Arabia and China, these are the giants. This is the meeting of giants. The Saudi oil accounts for 20% of total Chinese crude imports. Refineries increasingly rely on Saudi crude. Aramco holds a stake in a refinery in Fujian in a joint venture with Sinopec and ExxonMobil. This is clearly an important relationship for both sides, and it's a relationship that's expanding into the petrochemicals field as well. In addition to capital flows between China and the Gulf states, I like to say we also see head of state flows between China and the Gulf states. As was noted, President Hu Jintao has visited Saudi Arabia twice. He's visited the GCC countries as well. GCC heads of state can be found in China and India quite regularly. It is very striking, and I think it's worth noting that point as well, that President Hu Jintao is a very well-traveled man. But he has chosen not to visit Iran. And I think Prince Turki Al-Faisal said it best when he said that China is not necessarily a better friend than the United States, but it is a less complicated friend than the United States to Saudi Arabia. There is also the question, who won the Iraq War? We might say China has won the Iraq War. I won't go too deeply into, this is based on... Professor Downs gave us a good rundown of what what China has done in Iraq, but China has clearly won some of the most lucrative contracts in Iraq. And I think it's very important to follow this China-Iraq relationship going forward. And if you think about China and its foot dragging in Iran, and you think about China and its comparative speed with which it's actually enacting projects in Iraq, you think that this is China simply acting in a way CNPC acting in a way that any commercial oil company would act. After all, if you invest in Iraq, if you put money into Iraq, you've got a 50,000-man security force, aka the U.S. Army, protecting you. And not only that, you can get political risk insurance. You have all sorts of things. Obviously, the terrain can be difficult. Whereas if you invest in Iran in a significant way, you have the U.S. Congress breathing down your neck. You have state pension funds in the United States declaring their intention to divest from your companies. And you ultimately, if you are CNPC, you face the same question that Total and Royal Dutch Shell and BP faces when they invest in Iran. And that was put very well by the chairman of Total when he said that whenever you do an investment in Iran, you always have to ask yourself the basic question, is this worth the headache? And it's the headache of the sanctions coming down on you, it's the headache of the interest groups bearing down on you, and it's also the headache of the unwieldy, to put it politely, negotiating tactics of their Iranian counterparts. And so when you look at cross-border investment, China is the bigger FDI investor, but I think what's important to note is that Gulf investors, particularly the sovereign wealth funds, are very keen on playing the China growth story, and they seem to be wanting to play that growth story through major investments in these initial public offerings. And so when you look at India and Middle East energy, nearly three-fourths of all imports come from the Middle East. Its top suppliers are Saudi Arabia, Iran, obviously Nigeria, not Middle East, Iraq, UAE, and Kuwait. And ultimately, when you come to the conclusion, I think the most important conclusion, which was touched on earlier, is I agree with the panel earlier that China has not yet decided to play a role in Gulf security. And I agree that India has not yet decided to play any significant role in Gulf security. But neither of them would take very well to any attempt by Iran to close down the Straits of Hormuz. And so that's certainly something to think about as we think about the future. And I think the last thing that we need to think about when we think about the future is my friends at PFC Energy have come up with kind of a new way to look at where the future oil supplies and the future oil and gas players are going to be. And they came up with an acronym, and that acronym is BRISC. And BRISC is Brazil, Russia, and then Saudi Arabia and Kazakhstan. But the I is not Iran. The I is Iraq. And I think China has come to that conclusion as well. Thank you very much.
Thanks, Afshin, for a very stimulating and thorough presentation. Now we'll hear from Jean-Francois Sisnik.
Okay. All right. Where's my stuff here? Oh, in there. Okay. All right. Here we are. Okay, sorry for the small delay. It's a pleasure to be here, and thank you very much. Thank you, the Woodrow Wilson Center, for inviting me, and Hale, that's very, very nice of you to think of me. I'm not sure you're going to learn anything from me, because everything that I wanted to say has been said with a lot of eloquence from Erica and Afshin. And the problem of ever speaking along with Afshin in particular is that I never disagree with him, so it doesn't make it very interesting for the audience. What I might just do is really go over some of the points, because that's what I was intending to do, and perhaps bring a slightly different approach to it. But I will come to basically the same conclusion, as you will see in just a second. Here we are. No. Maybe I'm putting this. I'll use these here. Okay. Am I doing something wrong here? Oh, it's already there. Okay. No, okay. Well, of course, China is very active, but really my main conclusion is that there has been a choice made in China, I believe, and the choice has been Saudi Arabia, and Saudi Arabia is, in this case, winning the war, really. Saudi Arabia is really, and the key here, I think, and Afshin has mentioned it, and Professor Downs has mentioned it, the key is reliability. Any oil buyer wants reliability of supplies, and the Saudis have been extremely successful at proving this to the Chinese. And the Chinese approach to Iran at this point is just to amuse Iran, just to keep a toe in the water and not get into troubles, but be there just in case things really evolve. So let me go back to the oil trade. We've covered this quite a bit, and obviously the imports and the sales of oil by Iran are down very substantially. Now, they had gone up actually in 2009 a bit from 2008, but let's remember 2008, everybody was down because of the economic crisis. Now, one thing that is even of some importance, which has not been mentioned, so I might as well mention it since no one else has mentioned it, but the purchases of fuel oil, which is very important to China for petrochemicals and mostly for electricity, have declined. The exports by Iran to China have declined by 64%, which is a fairly large amount. China is known to sell gasoline to Iran, and that has appeared a lot in the press here, but really, the contracts are extremely small. I mean, the only one I could put my hands on was something for 600,000 barrels, which is not very much, at $92 a barrel, which is very expensive. Now, for China to sell gasoline to Iran means Iran is pretty desperate, because the cost of transport of gasoline is huge. It could be up to $10 a barrel. So there is no great advantage to the Iranians buying Chinese gasoline, except if you can't find it anywhere else. Afshin has mentioned Reliance. Reliance today has the largest refinery in the world, not far from Mumbai. And they used to sell gasoline to Iran, but they're no longer doing so. So it is really putting some pressure on Iran. And if you take the total bilateral trade, just oil and everything else, is $21 billion between Iran and China. And that includes about $10 billion worth of oil. So there's only $11 billion and those are mostly Chinese sales to Iran, and it's very small. Now, compared to this, we take Saudi Arabia, which we mentioned there was at 1 million barrels per day, over 1 million barrels per day in January, up from 2009, and of course it's been down a little bit, and in April, the last figure I got, it was down to about 750,000 barrels a day, surprisingly enough, and as was mentioned earlier, the largest supplier to China in April and May was Angola. So there is a diversification of supply here taking place. But the total bilateral trade between Saudi Arabia and between Saudi Arabia in particular and China in 2009 was $60 billion. So you see there's a factor of 1 to 3 between Saudi Arabia and China, and that's a big difference. So we see that China has increased its imports from other sources, and because they're trying to diversify, not just away from Iran, but also a little bit from Saudi Arabia, because Saudi Arabia is becoming so important. Reliability of supply is just as important as diversification of supply. Let me speak a little bit about the gas trade here, because this hasn't been totally covered, and so I have a little chance to do something here. But the Saudi Arabia does not import, is not really important on this trade with China, because Saudi Arabia does not export natural gas. The secret of Saudi Arabia's economic miracle in the past 20 years, and especially in the past 5 years, has been the fact that they use all their natural gas for their industrial development with great success. Unlike Qatar, which sells a good bit of its gas and exports it through LNG. But the Saudis keep this methane and ethane for their internal use, but they still export some propane and butane. The gas is used for electricity, water production, and to make chemicals, which then are sold to China and Japan, but mostly to China. Now, in the Gulf, Qatar, of course, is well known to be the main exporter of liquid natural gas to the world. But it's a story that's about to change, and you will see that has some influence on the Iranian position, because there is a major event taking place in the energy markets in the past 3 or 4 years, is that there is a decoupling of the prices or the cost of gas compared to the cost of oil. Today, a barrel of oil costs $70, between $70 and $80 a barrel, but the cost of gas in New York is down to $4 a million BTU. If you put that to compare to where it should be, at today's oil price, gas should be at about, if it was equal in terms of value of energy, it should be at about $11 to $12 a million BTU. The price today is $4 a million BTU. That's a big difference. Now, the Qataris are very blessed in a sense, because they have made some contracts a long time ago which guaranteed the purchase of gas at parity with oil. So Qatar is selling its gas to Japan in particular and to South Korea at $11 a million BTU today approximately, which is over almost 2.5 times what they would be paying if they were based in the US. So there is some issues here. Now, Qatar is also becoming the largest supplier in the world. By the end of this year, Qatar will be producing 77 million tons of LNG per year, which is by far the largest and way above the demand, because what happened in this, the increase from 40 million tons per year 2 years ago to 77 million tons per year now, is that ExxonMobil was going to take the difference and export it to the United States. And all of a sudden, the United States does not need it anymore. Why? One, because there was the economic crisis, but mostly because all of a sudden, we've discovered we had more gas than Qatar and Iran put together through shale gas. And all of a sudden, shale gas is not totally here. There's still some problems with the drilling. There's still some environmental issues. But the fact is, it's already had an impact on price. So the value of that price is so low that now people are producing more and more in the US to catch up on their income, and there's no need for Qatari gas. So all these millions of tons of natural gas are floating around looking for a buyer. Well, if you're the Chinese or the Japanese, then you have the choice of a long-term contract with the Qataris at $11 a million BTU, or a tanker that's looking for a home at $4 a million BTU. The choice is relatively simple. And people tell me, yes, but those are long-term contracts. Well, in the reality of energy transactions, there's no such thing as a long-term contract. So contracts will be renegotiated, and Qatar will see its income decline very substantially. Now, let me bring China into the picture and Iran into the picture here. Is that the biggest contracts, and we've already listed these contracts, and I'll go through them in one more minute. A lot of the very big Chinese contracts in Iran are for the production of LNG. Now, and those are promises, of course, and as has been mentioned, technology is not, the Chinese do not have the entire ability to do these LNG plants. Not on top of it, they don't also have the best ability to do offshore drilling for the South Pars field. So they're hampered by two issues in terms of technology. Here is offshore drilling and producing LNG. So considering that you're going to have to spend billions and billions of dollars, and it's over $22 billion just on the South Pars field, to drill into the South Pars field, make LNG, and then export it, the Chinese are going to have to spend $22 billion, and all of a sudden, the income from those contracts are declining by 2.3 times. Well, you're thinking twice about it, and my guess is that these contracts, at least these developments, will never take place in Iran. Now, of course, Iran has the second largest gas reserves in the world, as has been mentioned, but they don't have the cash to maintain these fields. And it is really quite amazing that Iran is a net importer of natural gas from Turkmenistan. It is exporting some to Turkey, but it is importing more from Turkmenistan. They cannot maintain their own fields, and they have a problem there. And again, they are giving contracts to the Chinese to improve these fields. But, you know, the Chinese are happy to sign the contracts or to get involved and talk about the contracts, but there's no great advantage into producing gas for the Iranian markets at 45 cents a million BTU. And there's no great export price at this point either. Now, the funny thing about all this is that ultimately the entire Gulf is short of gas because they have been victim of their own success on the Arab side of the Arab-Persian Gulf. The Saudis are short of ethane in particular to grow their petrochemical industry. And where could they get more ethane? Well, the only way they could get it at this point is from Qatar. And there are some political issues there, and Qatar is contracted to sell about 2/3 of its gas for LNG production. So the Saudis cannot buy Qatari gas at this point. Maybe eventually, in the long term, maybe there could be Iranian gas to be piped from Iran, but I don't think my children will see that. So or my grandchildren by now. So this decoupling of the price of gas has been a major disaster for Iran, in other words. Now, these are really going to be a bit of a repeat of what we just mentioned here. And you can read these investments, and they were already presented once before, but we're talking big money on this, especially on these gas developments, and in my view, these will not see the daylight. The Iraqi situation is really pretty exciting, on the other hand, and I don't have quite the same figure as Professor Downs on this, but my reading was that CNPC had 49% of the BP field in BP Rumaila contract with BP on the Rumaila field. The increase in production is supposed to be the same. But CNPC also has 50% of the bid with Petronas and Total, which is an interesting mix of companies on this Halfaya field to increase production somewhat to 535,000 barrels a day, and Sinopec has 20% on Zubair. Now this really is interesting because this could actually happen. And there's a question of security, of course, and many of the oil companies will tell you, oh, well, the Iraqis are really difficult to deal with. Of course, they're probably not as difficult as the Iranians, but almost. Nevertheless, most of the oil companies that are involved in these contracts are very optimistic that they can actually have some success in Iraq. And this is very interesting because Iraq, which is now producing 2.8 million barrels a day, could increase if all these contracts came to fruition by 2020, could be at 12 million barrels a day, which would be bigger than Saudi Arabia and whatnot. The interesting investments in China, of course, has been mentioned already, and they're very important. Is the 25% Saudi Aramco ownership of the big refinery in Fujian. It's not the biggest refinery in the world, of course, but it's a big refinery. And also lately, the 50% of the petrochemical plant in Tianjin, which just started operation and owned by 50% by SABIC, the largest petrochemical company in the Middle East, and I think the third largest in the world right now. And again, that's a Saudi state, 70% state-owned company. Interestingly enough, there are some or there is one mostly Chinese investment in Saudi Arabia in the oil field, in the gas field. It's a very, very long story I won't bore you with, but Sinopec did get a contract to do a research for dry gas in the deserts of Saudi Arabia. There were 4 contracts issued. Total got one, and Lukoil got one, and Shell got one, and Sinopec got one. Unfortunately, they haven't found anything yet, and none of the 4 contracts have found anything yet. It's not a big surprise to many, because some people have said, evil tongues in some companies, oil companies have said, well, the Saudis knew all along they wouldn't find anything, and it was done on purpose. But nevertheless, Sinopec did bid for this contract and hasn't found any dry gas, but created a good relationship with Saudi Aramco and the Saudi government in particular. So basically, as I mentioned before, the non-oil trade here is really the fact that there was only $10 billion of goods sold or exchanged between China and Iran if we exclude the oil, and it was 28 billion for Saudi Arabia. Now, the interesting part is that Saudi Arabia exports, besides oil, exports very large amounts of goods to China, mostly chemicals and fertilizers. And if you recall earlier, I mentioned that a lot of the gas in Saudi Arabia is used to make chemicals and fertilizers, the methane for the fertilizers and ethane and butane for the chemicals mainly. And that amounted to $28 billion last year compared to Iran's 0. And that's quite interesting. So in turns, the Saudis are importing a lot less from China. So the balance of trade between Saudi Arabia and China is vastly in favor of Saudi Arabia. So just I have a few points in conclusions here that we might just cover very briefly. But my view, and I'm basically reflecting what Afshin has said before, perhaps in a stronger fashion, but I think Iran is no longer of any interest to China. I think China likes to have Iran as an alternative source of supply. In other words, as I said earlier, China is amusing Iran. China is just securing oil supplies should something happen that could limit Saudi crude supply. The main and again, to reiterate what I mentioned earlier, but the main Chinese concern is the reliability of supply. And Saudi Aramco is viewed worldwide as extremely reliable. Now, I know that's their PR line, but it's also in great part true. On the other hand, Iran is not viewed as being reliable. There's a fear of military invention, which could destroy any kind of Chinese investments. And this is not totally artificial. In the 1980s, there was a $1 billion Japanese chemical plant that was destroyed in Iran. And, it can happen. It was destroyed by the Iraqis who bombed it out. The fact is that Chinese would have, as has mentioned many times before, the Chinese would have trade issues and political issues with the United States, and as has been mentioned also, the Iranians are notoriously difficult in to deal with in energy matters. So this is putting the Iranian in a very difficult position because Iran needs China, while China does not really need Iran. Well, in real terms, it means either they sell you oil at $40 a barrel instead of 70, or you don't deal with them. And the Iranians don't want to sell at $40 a barrel. So there is a big issue. So the fact is, when we saw that big decline in Iranian supply, it could be a political decision, but it's both a political decision and a pricing decision. Because the Chinese are not going to make any favor to Iran. The Iranians are making themselves no favor. So the only way you will deal with them is that if you can make a lot of money. And the Iranians don't want to go that route, and therefore they're losing out. So their negotiating position is extremely weak and is probably going to remain that way for the near future. So what's happened, what's left now is that Saudi Arabia has become by far the largest trade partner to China because of the reliability, because also of the advanced technology of its chemical companies. Just as a parenthesis here, the fact that the Saudis are selling billions and billions of dollars of chemicals to China are very important to China, because the Chinese miracle growth and the Chinese export is really dependent on the quality of its goods. It's very important for the United States market, for instance. Quality is very important. Well, the United States would not buy as many Chinese goods if the Chinese goods did not have the proper packaging, did not have the right finish, and a lot of this packaging and finish ultimately comes from the Saudi chemicals. And there is a sort of a transfer of quality through the line. And it's very important because it means that the chemical companies of Saudi Arabia work closely with the Chinese manufacturers who then can export their products better. Very, very important. The chemical companies in Saudi Arabia are among the best in the world because they are the latest and they bought the best technology. Some of them are 100% owned, a lot of them are in joint venture, but it's very important. So there's sort of this link in between China and Saudi Arabia. It's not a large amount of money in the world in terms of world trade, but in terms of quality and ability for the Chinese to sell their products, I think is very important. Of course, the Saudis also have a very large cost advantage in terms of fertilizers and chemicals. If I'm not mistaken, Saudi Arabia today is the largest exporter of fertilizers to Saudi Arabia. Why? Because the cost of methanol, which is the base of most urea and fertilizers in general, is 75 cents a million BTU in Saudi Arabia instead of probably $4.50 a million BTU in China today. So they have a major price advantage there. So in general terms, the whole Arab Gulf states like to work with China, and as has been mentioned, they like to contain Iran, and what China doesn't get from Iran, they get from the rest of the states. It also contains the United States a little bit. As been mentioned by one of the speakers earlier, is the people in the Arab Gulf states are very opposed to some of the U.S. policies, mainly Palestine, etc., etc., and they feel very negatively about the United States, even though some of the governments, by and large, in the Gulf Arab states support the United States. But knowing that the governments have China as sort of a backup, as has been mentioned many times, nobody's going to look to China to defend Bahrain or to defend the United States. But there is perhaps, and I'd like to finish on this, is that there is perhaps a slight change in paradigm in terms of international relations here. Is that until now we had something where the military power was the hegemon, had the power. Everybody in the Gulf followed the United States because we are the strongest military power. But our military power has become a weakness because it has shown that we could not handle Iraq very well and that it's creating a lot of tensions with the regions, the people in the region. What's really becoming of great importance is economic power. And the Gulf, as we have seen this morning, the Gulf sees that the future economic power is really with Asia in general and China in particular. And therefore, that gives them an enormous advantage in terms of international power and perhaps to become one day the next hegemon in the Gulf. I'll leave it at that. Thank you.
Well, thanks to all three of our speakers for very rich presentations on top of three earlier really terrific presentations. We have about 30 minutes to go. We will turn it directly over to you. I would request that you wait until you're called upon. You wait until we get the microphone to you. You introduce yourself and keep your comment or your question brief, please. I would assure those in the overflow room that if you wish to submit questions, we have someone down there who will take your questions and funnel them up to me, so we won't exclude you either. Now, I saw a hand, this gentleman right here, and then this gentleman right here.
Hi, thanks to the panel for speaking today. My name is Charles Loy. Recent Yale graduate and intern at Greenberg, Quinlan, Rosner. I'm also a very good coffee fetcher. Quick question about China's advantage in winning oil agreements. Why is it that the Chinese oil companies have been able to outbid other foreign companies? What do they bring to the table, particularly to Iraq or Saudi Arabia?
Well, I mean, I'll just very briefly, and I'll defer to Professor Downs on this, but it seems to me it's a price. I mean, they're offering a much lower per barrel price of extraction than anyone else.
Yeah, I mean, I would agree. I mean, I think the one great example of that would be if you look at the bids that were submitted for the Rumaila field in Iraq, that the Iraqi government initially said we'd like to pay foreign companies $2 for every barrel that they pump, and this was much lower, and most of with the exception, I think, of the CNPC and BP bid, all other foreign companies wanted many more dollars per barrel. They said we're not going to come in and produce oil from this field unless we can get several times that per barrel. And so I think in this case it was simply BP and CNPC willing to accept that $2 per barrel price. And I should add that this sort of was a catalyst. This really was a game changer in subsequent Iraqi auctions, and that if you look at what a lot of foreign companies were willing to offer, that they were willing to do $2 and below. And then that sort of in turn raises the question of why were BP and CNPC willing to go much lower than anyone else? And that sort of raises, and there are lots of different theories out there. Was it because, they were willing to take a loss subsidized by CNBC to get a foothold in Iraq? Does it have to do with special knowledge that a lot of times if you look at the winning bids for auctions, and in the case of a production sharing contract, if it's substantially higher, in the case of technical services, if the per barrel fee is substantially lower, that sort of raises the question of does someone have special knowledge of the field that the other participants didn't have? And I think in the case of BP, some people were wondering if that was true just because of BP's past history in Iraq and the surveys that they had done for the government.
I may just add that it is true because BP was the producer before the revolution and being nationalized. It was BP who was producing on the Rumaila field. But I think on the $2, I think it's BP who made the decision, not necessarily CNPC. I think after that it was a general analysis of what they could get away with. And I mean, after they lost, when ExxonMobil was negotiating on the first round, they bid $4 on one of the fields, and the next round they bid $175 on the West Corner field, which they got. So I don't think there was any secret to the outbidding. And as a correction on your question, if I may, they haven't really bid anything in Saudi Arabia except that gas field, which did not pan out anyway.
And that's because in Saudi Arabia, other than in gas, foreign companies aren't allowed to take equity stakes in the upstream.
Absolutely.
Gentleman in the second row in the middle.
Thank you. Naeem al-Haq, I'm a TV talk show host from Pakistan, visiting Washington. Jean-Francois mentioned a point which has struck my mind, which is that he said that Iran is not of strategic, or would not be of strategic importance to China. If Iran, as has been pointed out, is the third largest oil supplier to China, what would be the alternate route for China to seek those oil supplies? And secondly, does the panel feel that at any stage the American and Chinese policies in the region would come into a conflict?
I guess my name was mentioned, so I have to answer first, right?
You get to answer first.
It's a very valid point. The fact is, they are not as of today. Of course, things are changing up and down, and today they're now below even, as we saw from one of the slides, they're down to 9th supplier to China. But of course, that changes up and down. I think there is China has really an amazing ability to diversify its supplies, as I mentioned. Angola today is the largest supplier all of a sudden, but they supply out of Sudan. They have made deals with Kazakhstan. There's a pipeline now going from Kazakhstan into China. They're very close to the Russians now in terms of buying oil, and they've been negotiating with Putin directly to have the pipeline go from the Siberian fields to China, not to Japan, as it was planned originally. So they have, the key for China, for anyone really, is reliability and diversification. And the Chinese have played this game absolutely beautifully well, and if Iran doesn't play by their rules at their price, Iran's out. So I think there is enough there for that.
And I'm afraid I'm going to have to agree with Jean-Francois again. No, but I mean, in terms of the diversity of supply, when you look at China's numbers of the top 10, places it secures its oil imports. What's interesting is, say, number 1 will be 900,000 barrels per day or something, and then you go down 1, 2, 3, and then at the bottom of the list it will say others, and others will be about 900,000 as well, 1 million, and then so the others number is usually the same as the number 1. And so in the case of Iran, China has never been asked to really make a choice. And I think that, as John Alterman said, there's a certain deftness in China's foreign policy. And if they don't have to make a choice, why make a choice? When you think about, I'd like to think about China as kind of like its national treasure, the panda. And panda has to eat bamboo 18 hours a day to survive. China has to secure energy 18 hours a day and eat energy 18 hours a day to survive. So they're not in a position where they can really say to Iran, well, we don't really want your oil right now. They'll say they'll take it. Thank you very much. But I guess the point we were trying to make is that they have not put the kind of investments into Iran and put the kind of put Iran at that level where they would be considered one of its most important strategic partners. China routinely throws $10 billion into African countries. And this is so these are small numbers when you think about its interaction with Iran.
Erica?
Yeah, I had just 2 points I wanted to make. One of them is that today we keep talking about China, 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 but I do think on the energy issues it can be important at times to make a distinction between the central government, between the top leaders who have to sort of undertake this balancing act relationship with the U.S., energy, relations with other countries, so on and so forth, and the national oil companies, which are singularly focused on oil. And I think you could probably make the argument that Iran is is more important to the national oil companies than it is to China writ large. And again, that has to do, in my view, with long-term access to resources, that they're interested, they know that there are a couple of big undeveloped fields in Iran. They'd like to play a role in developing them. And I think that it's those upstream projects and the potential to be involved in them that's really more important to them than the trading relationship that I've had. I've had experts in Iran that I've met with in China who say to me, we can get oil anywhere, but it's really the upstream projects. But I also think, I guess to echo the comment made by my two co-panelists, and I forget who said follow the money, but if you sort of follow the money in the Middle East in terms of, where the Chinese are, investing that, Iraq, in terms of upstream projects, they've been quite active in signing contracts, final binding contracts, and you don't see, the same slow walking that you see in Iran.
John Alterman. And then we'll have a question from the overflow room next.
Thank you very much for three really terrific presentations. I think my question is mostly for Afshin, but it picks up on a comment that Professor Wu made. He was adamant defending the fact that there's a strategic relationship between Iran and China, and what you all agree on is in many ways it's game over. That China has made its strategic choice, and its strategic choice is not to align with Iran. I'm wondering, first, is that too much of a caricature? And second, is it really game over, or is there something Iran might do to put this game back in play? I mean, oftentimes Washington is seen as being alarmist, right, and too concerned about China and too concerned about Iran. And what we've heard today, and I'm sympathetic to it, is that, no, actually, Iran has lost. But is there still another move to be made, or another move that might be made, that might put this back in play and might put this in the category of things that people in Washington should worry more about?
It's a very good question. I guess it depends on how you define strategic, doesn't it? And in many ways, I'd say that there is some. You got the two of you actually agree more than you disagree when you pointed out the deftness of Chinese foreign policy. And in my view is that I don't think that China. I don't think it's game over for China, because I don't think they've ever really had to make a choice, and I don't think they ever will have to make a choice. Now, when you follow the money, yeah, they've put more of their eggs in the Iraq basket. When you follow the money and you follow the heads of state flows, and the capital flows as well as the heads of state flows, you see the Saudi-China relationship is richer. It's more robust than the Saudi-Iran relationship. But as in much the same way, it was which Chinese premier was it who, when he was asked by Henry Kissinger, Zhou Enlai, what he thought the effects of the French Revolution were on world history, and he said, well, it's too early to tell. This is a long game, and I don't think they've had to made the choice, and they've never been faced with that choice, and I don't think the United States is in a position to ever force them into a choice, mostly because of that $900 billion U.S. Treasury debt that you pointed out earlier. So that's the way I see it. I just don't think they've actually made that choice, and they've kind of kept Iran on kind of a lower grade relationship, but without declaring them not a strategic relation.
And just to go back to, in fact, it's very related, the question to Mr. Al-Hag earlier, which we did not answer, on the potential problems between conflicts between the United States and China. I think what we seem to say is that there won't be such conflicts. I mean, the Chinese, there's competition, but competition is different from conflicts. And there will be a lot of competition between China. There is a lot of competition between China and the United States, but ultimately China is not going to take a bullet, as somebody said earlier, for Iran. You said that, John, and I totally agree with that.
I would agree with Afshin that China hasn't had to make a hard choice yet, although again I do wonder in the energy sector if the new legislation is going to bring China closer to having to make a hard choice, in that I think that, and I guess to get back to the question of what can Iran do to put the game back in play. I agree with my sort of co-panelists that Iran is not in a position of strength here, and I think that what they've tried to do with China is that there's been an effort, and you see this especially with energy, to try to get Chinese companies to come in to sign contracts, ideally to sign contracts to sort of bind China's interests more closely to Iran. And I think the calculus there is that if the Chinese have access to huge projects, if they have lots of money at stake, then is that going to prompt Beijing to do more to protect Iran's interests, and and this is continuing, in the run up to 1929, and with all the talk of with the U.S. sanctions, which Obama had signed earlier this month. There were efforts. There was the effort to try to transfer operatorship of South Azadagan to CNPC, and what I think is interesting, and again, with the new U.S. Legislation, is that I think it sort of takes what was sort of the least bad option for both countries off the table. That before in the United States we could just turn a blind eye to Chinese investments in Iran. We never sanctioned anybody under the Iran-Libya Sanctions Act, which I guess is now the Iran Sanctions Act. And I think, and I'm not saying that a hard choice is definitely going to have to be made, but right now if you're a Chinese company and you want to sign a buyback contract for an oil field, that's going to trigger an investigation in the United States, which it didn't in the past. When Sinopec signed the agreement for the Yadaviran field, nothing happened. And so now just signing a contract, so it's not even the $20 million threshold. Now it's my understanding is that if just a contract being signed triggers an investigation and a determination, I think that raises the stakes for both Beijing and Washington. If you're a Chinese oil company, are you going to calculate that, the U.S. has never sanctioned anyone, Washington really needs Beijing's cooperation, so you're going to go ahead and sign that contract? If you're the United States, if they do that and you have to launch an investigation, what are you going to do? Are you going to give a national interest waiver to the Chinese and irritate all sorts of governments and companies in Europe, or are you going to slap sanctions on the Chinese company? And I don't think the Chinese firms would be hurt the way like a Shell or someone like that would be hurt in the United States, because they just don't have the same exposure. I don't think that the Chinese company or the Chinese government would be happy to have their sort of company chastised like that in the court of public opinion. But again, this is just, these are just ideas I'm putting out there. I don't know what's going to happen, and there could be creative workarounds. Do you have Chinese companies sort of slow-walking projects on fields for which there aren't final contracts signed? Do you just sort of keep the contract in the MOU phase, to avoid having to prompt the United States to respond? And then the other question, the other theme that came up that I think in the presentations today that I think certainly holds in the energy sector, if not writ large as well, is this idea of who needs who more, and do the Iranians need Chinese energy investment more than the Chinese need to invest in Iranian upstream projects? And I think you could probably make a case that the answer is yes, that there are, even though all resource-seeking oil companies today will tell you it's harder to find good big projects than in the past, there are still other places that the Chinese companies can go, like Iraq. And I'm not sure right now who, if the U.S. companies were never there, if the European companies are not starting new projects in Iran, if they're pulling out, who else? I don't know, the Indians? I don't know who else is going to be willing to, to go into these big projects if the Chinese are not. Just leave that on the table.
In order to get several more questions on the table, I'm going to ask my panelists up here if only one of them will respond to each question. The first question comes from the other room. It's about Iraq. A question about the nature and the extent of Iraqi competition with Iran and Saudi Arabia. Anybody volunteer to take that?
The nature and extent of Iraqi competition
with Saudi Arabia and Iran.
Oh, okay.
Competition unspecified.
I might take a quick
stab
at it. This is a very interesting point, in the sense that, and I might bring Iran into this again, because everybody has been saying often, we see in the press that there's a lot of links between Iraq and Iran, and that Iran really controls the Iraqi government. I think the developments, the oil, especially the energy developments in Iraq, means that basically there will be enormous competition between Iran and Iraq. And And surprisingly enough, in my view, there might be less competition between Saudi Arabia and Iraq, because ultimately, my conviction is that the Saudis would like to reduce their production of crude oil in order to maximize their value-added productions with their own energy and chemicals and whatnot. But they need the world to still be supplied with oil, so they see the Iraqis as providing that. So I would say the tension between Saudi Arabia and Iraq in terms of oil production, with the Iraqis ramping up, in my view, is minimal and in the Saudi interest in the long term. However, the Iranians do not have the capital ability to invest into value-added production with their energy, and therefore they need to produce more of the oil and more of the gas. And therefore there will be tremendous tensions between Iraq and Iran as Iraq ramps up.
Good, thank you. If I can recognize my colleague Halas Fandiari.
Question addressed to Afshin. If I was sitting today in Tehran and watched the last 3 hours on live webcast, which they usually do, my conclusion would be China is an unreliable partner, given the vote against the, in favor of the sanctions, no matter how much the Chinese claim they tried to water it down, and they did or not. But it has turned out to, and the attack in the Iranian press on Iran's relation with China and, of course, Russia. So where would I turn to? Who do I turn to? What are my alternatives?
I mean, this cuts to the core of Iran's foreign policy position today, doesn't it? As you well know, my own view is that Iran is as strategically lonely as it has been in decades. It does not have a single significant ally that would come to its aid in the event of a shooting war. And these allies of China and Russia have not even been willing to back them in the United Nations Security Council, though they have watered down the sanctions resolutions. So it does leave Iran quite vulnerable. And if I were an Iranian a technocrat working with NIOC or with NICO, the Naft Iran Intertrade Company, which is the trading arm of Iran's National Iranian Oil Company, or if I were an Iranian central banker, I'd be constantly dealing with shifting alliances because European banks that once worked with me no longer work with me. So then I seek Chinese banks and Indian banks, and they work with me for a little while until Stuart Levy shows up at their door. And then they no longer work with me again. And so I'm constantly dealing with, making new alliances and constantly dealing with skirting. There's a reason the National Iranian Shipping Company, Islamic Republic of Iran Shipping Lines, is constantly changing the names of its ships. Because they're constantly having to deal. There's this cat and mouse game. There's an intelligence at the high seas that are taking place. So Iran is strategically lonely. So it cannot count on China and it cannot count on Russia. And in fact, Mahmoud Ahmadinejad, the Iranian president, a couple of weeks ago said as much. He said, and I quote and paraphrase, are these our neighbors? Are they our friends? Or are they something else? They need to let us know. And that was his exact quote after the China and Russia signed on to the... So it's a strategically lonely country.
Question here in the second row. Let's see if we can get 2 more questions in.
So Peter Gerritsen, SSG. So coming off of that, if you're a strategically lonely country right now, does that push you more and more to needing your own defense guarantee with a nuclear weapon? Or does that push you into a position where the U.S. has an opportunity for a rapprochement right now? And the second question I wanted to... I'm
only going to let you have one, sorry, because I want to recognize one other person. Sorry. Go ahead, we'll get the other question on the table now. No, let him... Yeah.
Hugh McElrath, Department of Energy. I will stipulate that I'm not a specialist on oil and gas pricing, and that's my question. I have heard it said that the Iranian regime is, the shoe pinches at $70 a barrel. I'm sorry, I don't know the equivalent natural gas price. Conversely, can China and India pay $150 a barrel without breaking a sweat?
Okay, who would like to take the first question?
Okay, yeah, sure. Does Iran's strategic loneliness make it closer to becoming nuclear weapon state. The short answer is we really don't know whether Iran is seeking a weapon or they're seeking the Japan model in which they would be able to have enough enriched uranium to flip a few switches at a short moment's notice. But what we do know about these sanctions is, and kind of the increasing international isolation, is that the IRGC companies are becoming more powerful. And when the Chinese companies or Indian companies, others exit these gas projects, they're often replaced by IRGC companies. The South Pars phases, Iran has, it's a 24 to 28 phase project. It's completed about 10 of them. The rest of the phases are increasingly given to Iranian companies, many of them affiliated to the IRGC. So the IRGC has entered the oil and gas business, as well as the infrastructure business and other sorts of businesses. So clearly it does, to some extent, strengthen the hand of the IRGC and its control over the economy. But at some point they may come to the same conclusion that the Russian oligarchs came to, is that this is good, we have a nice monopoly going here, but we'd make a lot more money if we listed on the New York Stock Exchange. That day may not come for 10, 15, 20 years from now, but right now that's the only conclusion that we can make.
$150 a barrel.
I guess on the pricing issue, I guess first with respect to Iran, I'd say that, I guess I'd agree with John Francois that the Chinese companies I don't think are going to, I think if Iran wants the Chinese to buy more, it's going to need to offer them a substantial discount on the price of crude. And I don't think that the Iranians are going to do that. And I think conversely, when it comes to the Chinese selling gasoline to Iran, I suspect that if the Iranians want to buy more gasoline from the Chinese, they're going to have to offer to pay a premium for that. In terms of $150 per barrel oil, I mean, I guess in July 2008, we saw prices hit $147 per barrel, and I don't think the Chinese like that any more than we did, in part because it really threw their whole crude oil pricing system into, and it really sort of created problems for their oil product pricing system, and that in China, refined product prices are still set by the state, and I think now once they get above $80, you start to see problems, and you start to see the government trying to squeeze the refiners. But again, it sort of depends who in China. Just the same way it sort of depends who, obviously in the United States, some people were able to deal with $147 per barrel prices easier than others.
Jean-Francois, do you want to say one last thing before we close up?
No, at $70, yes, I guess it's just the break-even point for the for the Republic, Islamic Republic. So it does the shoe pinch. It's at 70, and they don't make much money after that because there's so much money that is being taken out of Iran by the elites and put into Dubai anyway. So it's probably higher than 70. So let's say that. To answer somewhat your question, is the Iranians would suffer more at $70 per barrel or $60 per barrel than we would suffer at 140. So.
Fair enough. Well, we have come to the end of a very stimulating 4 hours. If you'll join me in expressing your appreciation not only to our three, but to the other ones.